Welcome back to Investing Talk Podcast. Today we're doing a deep dive into a question I know many of you are asking. Is New Hold'em's a good time to buy right now? We've gathered some really fascinating insights from our analysis to help you navigate this pretty complex decision.
Absolutely. New Holdings is, well, it's a huge player in digital banking, especially down in Latin America. Our material really covers the gamut, from their financial health deep down to what the market sentiment is looking like. We'll be breaking down what the numbers are telling us and, importantly, what that might mean for you as a potential investor, weighing that incredible growth against some potential underlying risks.
Okay, perfect. Let's unpack this then. Our mission today is simple. Give you a clear, concise picture of New Holdings so you can walk away feeling well-informed, whether you're prepping for a meeting or just, satisfying that curiosity about this really interesting company. And before we jump right in, if you're finding these deep dives helpful, please do hit that subscribe button, give us a like, maybe leave a comment with your thoughts. And hey, if you're feeling particularly generous, consider buying us a coffee. Your support really does help us keep these deep dives coming your way.
Okay, let's start at the foundation then, the company's fundamentals. What do the financial statements really tell us about New Holdings' health and, maybe more critically, their growth path?
Well, what just leaps out from the data is the sheer scale of their growth. It's quite something. New Holdings showed a really robust 48.73% increase in revenue in 2024. That's compared to the year before.
Wow, nearly 50%.
Exactly. But what's maybe even more compelling, especially for a high-growth outfit like this, is that their net income almost doubled. It jumped by 91.37% in that same period. 91%, okay.
Yeah. So this isn't just, growth for growth's sake. It suggests they're scaling profitably. And you see that backed up by a strong return on equity, 30.77%. For a digital bank in these competitive emerging markets, that's frankly a powerful sign of really effective management and a business model that's clicking.
That profit growth does sound incredibly strong, especially, like you said, in a sector that often chases market share first. But what about the other side? Debt levels, cash flow. Are there any potential, red flags maybe? Particularly around liquidity. Did our sources flag anything there?
That's a really important question, and it does need a closer look. Now, while our analysis didn't give us super detailed debt breakdowns, the company's current ratio, it stands at 0.54.
0.54, okay.
Right. And generally speaking, a current ratio below 1 what can signal potential liquidity challenges.
Meaning not enough short-term assets to cover short-term debts easily.
Precisely. Now, for a traditional bank, that might be a bigger worry. But for rapidly expanding fintech like New, it's often, let's say, a calculated trade-off. They're pouring money back into fueling that explosive growth.
Okay.
And that can temporarily squeeze liquidity figures like the current ratio. The key thing, as our sources suggest, is to keep an eye on their cash generation from operations. That needs to stay strong to balance this out.
That's a really crucial distinction. Thanks for clarifying that. So given that aggressive growth and their unique financial picture, what actually gives New Holdings its competitive advantage? How are they carving out space in such a crowded digital banking world, especially in their key markets?
Well, connecting this to the bigger picture, New operates across these key, often, let's be honest, underserved markets, right? Brazil, Mexico, Colombia. Their edge isn't just one thing, like a slick app. It's sort of multi-layered. First, their operating model is lean, very tech-driven. That lets them acquire customers and roll out new products way cheaper than the old brick-and-mortar banks.
Right, the cost advantage.
Definitely. Second, they've built incredible brand loyalty. They really focus on customer experience, simplifying things that used to be complicated. And that's let them expand fast, beyond just basic banking into credit cards, investments, insurance, you name it.
So they become more integrated into the customer's financial life.
Exactly. And lastly, navigating those different regulatory environments in Latin America and tailoring their offerings locally, that's actually a pretty big barrier for others trying to jump in.
That really paints a clear picture of their strategy. Okay, let's move beyond the fundamentals then. Let's talk about how the market is actually valuing New Holdings right now. What do the key metrics, like the PE ratio, tell us about what investors are expecting?
Okay, so the forward PE ratio for New Holdings is sitting at 23.9.
24, basically.
Yeah, around there. And to put that in context, that's notably higher than quite a few industry averages. What that usually suggests is that investors are willing to pay a significant premium for New Holdings' earnings.
Because they expect big things down the road.
Precisely. They anticipate continued, really strong growth. It's a clear sign of investor confidence in that long-term story, their ability to keep disrupting traditional finance.
And what about just the overall size? The market capitalization. What does that number tell us about confidence in news' standing?
The market cap is substantial. It's $65.80 billion.
65 billion. That's
It
serious.
is, and it's not just a big number. It really cements New Holdings as a major player on the global fintech stage, not just some regional upstart. It signals that the market believes in their long-term potential to scale and disrupt. They see them as a significant force.
Got it. And what about the professionals, the analysts covering the stock? Do they have a specific price target in mind? Does that line up with the current valuation?
Well, our material didn't give us specific discounted cash flow models, but the average analyst price target does suggest potential upside from where the stock is now. So yeah, it indicates a general optimism among the pros following the stock, backing up that idea that they see more room to run based on the company's path.
Okay, now let's shift gears again. Let's look at the technicals, the charts, the patterns. What's the stock's recent price action been like? What's the overall trend telling us about its short-term behavior?
Well, volatile is definitely a word that comes to mind. Our analysis shows a 52-week range stretching from about $9 up to over $16. Recently, it's been hovering around
What a
$13.55.
range.
It is. And its beta is 1.08. What that tells us, essentially, is it tends to move a bit more than the overall market. So for you as an investor, that means, well, potential for higher gains when the market's up, but also carries a bit more downside risk if the market corrects. It's a more, let's say, active stock to hold.
Okay, more movement. And for those who track indicators closely, what about the RSI, the Relative Strength Index? What's that saying right now? And did we get any macro analysis from our sources?
Right, the 14-day RSI is at 62.79.
62.79.
Yeah. That reading suggests the stock might be in a slightly overbought condition currently, meaning, it could potentially be due for a small pullback in the near term. It's not a screaming sell signal or anything, but something to be aware of. As for MACD, no. Our analysis didn't provide specific info on that for this deep dive.
Okay, fair enough. Now, beyond the numbers and the charts, news and just general market mood can really sway a stock, right? What's been the notable news around News Holdings that might have shaped how it's been performing lately?
Yeah, this is where it gets really interesting, actually. Neuf Holdings delivered strong Q1 2025 results. Our sources really highlighted significant growth in both revenue and, crucially, customer acquisition.
Ah, so hitting those key growth metrics.
Exactly. And that definitely fuels positive sentiment. It reinforces that market narrative about their expansion. Strong operational results tend to translate directly into investor confidence.
Makes sense. And what's the overall feeling from analysts right now? Are they
Yeah.
generally bullish, cautious? What's the consensus?
The consensus rating from the analysts covering it is a pretty clear buy.
A buy. Yeah.
Yeah. And they have an average price target of $15 mid-50s. That clearly suggests a high level of optimism about the company's future performance and its potential to keep growing. That kind of consensus can often act as a strong tailwind for investor sentiment, too.
Looking ahead then, beyond the latest earnings, what are the upcoming catalysts? Things that could potentially move the stock price, one way or the other.
Well, the most immediate and probably most significant catalyst would be their next earnings report. That's currently slated for August 14th, 2025.
Okay, next month then.
Right. These reports are often really pivotal moments. They can lead to pretty considerable price movement depending on whether the results meet, beat, or miss what the market's expecting.
And are there any bigger picture things like regulatory changes or macroeconomic events that could particularly hit Norton Holdings, given where they operate?
Oh, absolutely. You always have to consider those. Beyond just company news, broader macroeconomic conditions are key, especially in Brazil, Mexico, Colombia, their main markets. Any shifts there could certainly impact performance. And then any significant regulatory changes, specifically in digital banking or fintech, those would be crucial to watch. They could affect news operational freedom or their cost structure.
Right.
These are always important factors for investors to keep an eye on. Sometimes they can even outweigh company-specific news, honestly.
Good point. Okay, so every investment, especially in a hot sector like this, carries risks. What are some of the key risk factors specifically tied to New Holdings that our sources pointed out?
Yeah, there are definitely a few areas to keep in mind. On the stock-specific side, one thing noted was that New Holdings has missed earnings per share estimates by a penny, so $0.01 in recent quarters.
Okay. Small, but noticeable.
Exactly. While it's small, it could raise some questions about, the consistency of future financial performance, especially when you have such high growth expectations already baked into the price.
Right, managing expectations. And what about risks that affect the whole sector or the wider economy? Things investors should be mindful of.
Yeah, looking at the bigger picture, Sector-specific risks, like just general market volatility, that's always there, especially for higher beta stocks like new. Economic uncertainties across their regions or even globally could definitely impact consumer spending and the demand for financial services.
Makes sense.
And then you have the broader macro risks, like big shifts in interest rates, that could affect their lending profitability or even their access to capital for more expansion. These factors could certainly put a damper on the company's growth path and how investors feel about it.
Okay, so we've covered a lot. The explosive growth, the strategic position, that premium valuation, but also the liquidity points, the small earnings misses. Pulling it all together, what does this mean for our listener? What's the overall rating and recommendation for new holdings based on our analysis?
Right, balancing all that out, the really strong growth story against those identified risks, the overall rating for new holdings comes out as an 8 out of 10.
An 8 out of 10. Okay, pretty strong. And for someone thinking about potentially getting in, given the volatility but also that positive analyst view, what's a reasonable entry price range to think about?
Well, considering that recent volatility and the projected growth, our analysis suggests that a buying opportunity might emerge around the $12 to $13 range.
$12 to $13.
Yeah, that level could provide a decent potential upside towards that average analyst target of $15.50 we talked about. It potentially offers a more favorable risk-reward setup if you're looking to start a position.
Got it. And is this leaning more towards a short-term trade, playing the volatility, or is it really a long-term investment based on those fundamentals? How should someone approach it?
That's a great question. While yes, the stock's volatility and some technical signals might create short-term trading opportunities, our analysis really points strongly towards the company's solid fundamentals, their aggressive market capture, that expanding product suite. It all makes it much more suitable, we think, for a long-term investment strategy.
So think longer term primarily.
Right. Short-term traders probably need to exercise more caution, just given that inherent volatility and those potential liquidity risks we touched on earlier. Those could lead to some sharp swings.
And just quickly, for those who might still consider it for a shorter term trade, did our sources suggest any stop loss or take profit levels to help manage that risk?
Yes, they did. For trading purposes, the suggestion was to consider a stop loss around $11.50
Okay, 1150.
and a take profit target up at $16. These levels are based on recent trading ranges and sort of align with the upper end of analyst targets, giving some clear boundaries for managing risk.
Well, that was genuinely a comprehensive deep dive into new holdings. Thank you. It seems clear that, yeah, despite some volatility and those liquidity things to watch, the company's powerful growth, its unique position in underserved markets, and that steady analyst optimism really do present a compelling long-term narrative.
Absolutely. And if we connect all these different threads, fundamentals, valuation, technicals, sentiment, it really underscores how vital it is to look beyond just one headline number or one metric. Understanding how all these pieces interact gives you a much richer and, frankly, more useful perspective. It's about seeing the whole picture, warts and all.
So as you, our listener, process all this information, maybe here's a thought to chew on. How much weight do you personally give to that kind of explosive growth potential versus maybe more conservative measures like current liquidity or short-term financial consistency, especially in a fast-moving sector like digital banking? And how does your own personal risk tolerance shape whether a company like New Holdings, with its specific profile, actually fits comfortably within your investment strategy?
Yeah, that critical thinking is just so essential, isn't it? Especially with the flood of information out there. Keep questioning, keep exploring, and always think about how these different pieces of the puzzle fit together, particularly when they might seem to point in slightly different directions.